Well, what I will tell you is that, and it's interesting, part of the reason the premiums were so cheap for the last several months has been the overhang of backdated items, where for the first half of the year, I didn't sell anything 2024. We had so much stuff from previous years and a lot of people selling. So I would expect to see premiums really start to slowly and then maybe even gradually and faster move up as we get into the fall, which is typically when that happens, let alone with the BRICS meeting in the election. I'm shocked it's lasted this long with the strength of gold and the central banks buying. I'll be really shocked if we don't see something that wakes people up.
Today, we're diving deep with Andy Schectman, the CEO of Miles Franklin, into the world of gold and silver. This past week saw a sell-off, but don't let that fool you. JP Morgan just released a surprising new report, urging investors to buy the dip with targets set at $2,600 for gold and $34 for silver by 2025. Wondering why? Andy's here to break it all down. From the latest price forecast to what the big banks are thinking, we've got you covered. Whether you're an experienced investor or just curious about the market, this video is packed with insights you won't want to miss. Tune in to understand the buzz and see why now might be the perfect time to jump into gold and silver. Let's get started.
I mean, look, man, it makes sense, Chris. I mean, everyone talks about the price of gold and silver and inflation and soft landing and all of the noise, but let's break it down and make it real simple. I mean, look, we're adding $1 trillion in debt every 100 days, and we have 150 trillion in unfunded liabilities. The national debt is up 11.5 trillion since 2020. And this is a country that has its fiscal house not in order. And when you look at the unfunded liabilities, who's going to pay for them? And you know, when the Congressional Budget Office says in 6 years, 100% of tax revenue goes just to pay mandatory entitlement and interest on the debt only, when you realize military spending is discretional, who's gonna fund our military? So we have a situation that is it's not, we can't continue down this path, put it to you that way. And so I would just simply say that ultimately gold and silver go higher in the face of a dollar that falls. And I don't know if it's gold and silver going higher as much as what JP Morgan is saying is that the dollar has to fall. And that's really what I think ultimately will happen. Now, when you look at what's happening around the globe, the de-dollarization, the de-treasurization, a growing union of countries, as we've talked about forever. Why would anyone want to hold treasuries? You look at gold, it's up 9.9% on average for 25 years. That's doubled the pace of the 10-year treasury. And we've proven to the world that we don't like what you're doing. We'll take your treasuries and might even give them to the country or buy weapons with the proceeds and give to the country you're in a war with. That's a very tough thing to come back from. So I think ultimately it leads to more of the same. Countries seeking alternatives to the dollar, seeking alternatives to the treasury. Read Zoltan Pozsar. This is Bretton Woods 3, all about commodities. And it's also a country that has obligations that will be very difficult to meet just from tax revenue. So where are your options? You know, raise taxes, print money, and selling treasuries in an environment where there's only $8 trillion in treasury holdings that are foreign held. The majority of it is owed to us. Foreigners are not really keen. Now, there are some countries, if we are to believe that UK and Ireland and Cayman Islands are keen on holding our treasury debt, but the ones that have been responsible for funding our spending binge seem to be moving in another direction. So yeah, ultimately, I think those numbers might even prove to be low. Ultimately, gold and silver go higher in the face of obligations by this country that can really probably only be met through printing of money or monetization of bonds. Same thing, because just no one wants to hold our treasuries because of inflation risk, default risk, and outright confiscation risk. And I think that's really where it is in its simplest of terms. So yeah, I don't think we've seen anything yet, I guess, is the bottom line. And I'm happy with those those numbers, but I would think that they could actually be much higher. That's the most important thing. When the central banks say we're going to keep buying, sure, I would argue that the numbers that we all are led to believe are way underreported. The IMF says that, the analysts at Bank of Montreal says that, and everyone has said that about China in particular for years, going back as far as I can remember. So I would simply say that there is no reason for gold to have been reclassified tier one. And when you see, other than that, it's significant in terms of where it's going. And when I say gold, silver is part of gold. And as one goes, so too will the other ultimately, for different reasons now. But they're not going, one's not going to the heavens without the other one coming with. But I think when you see the repatriation, it speaks volumes. It's about the loss of trust. This is what it's all about, the loss of trust. And can you put Humpty Dumpty back together? Don't know. The trust is something that I think is very difficult to get back once you break it in any form of life, whether it be relationships or, in this case, the world reserve status or the center of free trade. People look at this country differently now in many ways. And I think, maybe the most important way is the risk of having assets in treasuries as savings. Instead, they're looking at commodities, which I think have no counterparty risk, and the relevance of how important they are moving forward. I think Zoltan nailed it. So yeah, it doesn't surprise me the central banks say that, and I would argue that they're buying way more than they're telling us, and producing more than they're telling us. So, tell us just enough to keep us interested. But if we really knew how much the Chinese were buying or any of these countries, the price would go parabolic. And it's in all of their best interest during the accumulation phase to be tight-lipped about that and not be genuine. Doesn't do them any good to do that. Well, what I will tell you is that, and it's interesting, part of the reason the premiums were so cheap for the last several months has been the overhang of backdated items, where for the first half of the year, I didn't sell anything. 2024, we had so much stuff from previous years and a lot of people selling. That's for the most part gone. And you can't find much in the way of backdated material anymore. That would be step number one. Silver Eagle premiums have been on the rise. That would be step number two. I would say that the premiums are just about ready to start moving. They've moved up a little bit, but the tightness in the physical market, in terms of secondary product, we've seen kind of a ceasing, if you will, of the sellbacks. And now it's moved now to people are buying again, but you don't find those really, really great deals on the backdated stuff that we've seen. I would still say that probably the best value, period, bar none, would be junk silver, pre-65 dimes and quarters, because it seems as though that's the one item that hasn't kept up with the sovereign mint coins recently, and through most of the pandemic was only second to Silver Eagles in premium, and most of the time north of $10, $11 over spot, and now you're buying it at well under $2 over spot. So if I were buying anything right now, that's what it would be, because the premium on that has yet to match those of the sovereign mint coins, which is really kind of confusing. I can't explain it other than to say it is the way that it is. But yeah, whether it be big stashes of 100-ounce bars or backdate sovereign mint coins like Maples and Eagles and Philharmonics, it's all gone. So I would expect to see premiums really start to slowly and then maybe even gradually and faster move up as we get into the fall, which is typically when that happens, let alone with the BRICS meeting and the election. I'm shocked it's lasted this long with the strength of gold and the central banks buying. I'll be really shocked if we don't see something that wakes people up into the election that would push premiums higher. But it's still ultimately a very advantageous, it's a buyer's market right now, at least in terms of price.
Thanks for joining us in this insightful discussion with Andy Schectman. If you found this video valuable, don't forget to like, subscribe, and hit that notification bell so you never miss an update. Remember, staying informed is key to making the best investment decisions. Share this video with anyone who could benefit from these insights. Have questions or thoughts? Drop them in the comments below. We'd love to hear from you. Until next time, keep your investments shining and stay ahead in the game. See you in the next video. Thanks again.